Hi, Jim Gore from Thor Wealth Management. There's a lot of things going on with GameStop stock price that really needs some discussion and also some education. First thing is, when you're looking at a company, you should always look from an investment standpoint what is actually happening within the company. So let's look at GameStop's history of revenues and stock price. Well, as you can see from this chart, going from 2004 to 2010, GameStop was growing very rapidly. That's when my children were in high school and middle school, and it seemed like we were always at GameStop and running into our buddies, buying the new Mario Kart or Warrior Brothers, whatever it was. And then you saw that the revenues plateaued in 2010. And then look what has actually happened more recently. You've actually seen a drop off in revenue the last couple of years, and last quarter alone, the revenues of GameStop was down 30%. Well, what is happening fundamentally within the company? Well, the whole industry of gaming has changed dramatically, just as videos did for Blockbuster. If you remember, we used to go to Blockbuster, rent our videos, bring them home, watch them, and Blockbuster was doing very well as a stock and as a company. But they were overtaken by Netflix and Amazon Prime. Who's going to go out and rent a video when you can stream it live? So technology basically forced Blockbuster to go under. Well, the same thing is happening with GameStop. GameStop has continued to cut stores. Revenues continue to fall. Because why go to GameStop when you're on your console? You can download the games and install them onto your console yourself. You don't need to go to GameStop. So that was the thesis for a lot of people that were shorting the stock. The stock was $5 a share in August, and it got up to about $18 a couple of weeks ago. While sales are deteriorating, and a lot of people started shorting the stocks. But what happened was they shorted the stocks, and almost the entire float, all the shares of GameStop were shorted. Okay, so what happens when you short a stock? If I want to short a stock, I sell it to someone. I borrow the shares at, let's say, $18 a share from Joe, and I sell it to Kelly over here at $18 a share. And my hope is I can buy back the shares at $10 and give it back to $10 a share, and I make $8 a share on that company. And that's what a lot of short sellers were doing. But what happens is, in a short squeeze, they are forced to have to buy it back, because the person that they borrowed their share from say, hey, I want my stock back. So they have to buy it back at a higher price. And that is what has happened here. And that is why it's very important, if you have someone that is shorting stocks, that they have a very disciplined approach. And one of the things that we look for a manager that is shorting any stocks is that they don't short anything, any stock that has more than 20% of its stock already shorted, because then you have risk of what is happening now with GameStop, which is a short squeeze. So those people that are actually buying the stock right now, you have to look at it from a fundamental basis and say, is this the type of company I want to own that is fundamentally, the business is deteriorating? Well, what we like to do is look at the options market to see what the price really should be. And so, take out the daily swings, because by the time you see this video, the stock could be 350 or it could be 50. I don't know what it's going to be. But what I look at it from an investment standpoint is, what is it going to be in the future? And just looking out for 5 months to July put prices, you see something very interesting. Right now, the July $70 put, which means basically I buy a put and I can sell it at $70 in July, right? What is the cost for that? Well, right now the cost is $34. So, what that means is that, I take the strike price is 70, it cost me 34. My break-even point is $36. So that the options price is right now, the option traders are saying GameStop will be $36, worth $36 a share in July. The current price, as of what I'm looking at right now, and it can fluctuate, is $220. So what does that mean? That means that the option price is saying it's $36 a share in July. If I'm paying $220, that is a drop of 84% that the expectations are in GameStop from here through July. Now, short-term traders, it really doesn't mean much. I wouldn't short the stock if you can borrow the shares, because you can get squeezed out. That's very risky. But I wouldn't be buying this. And any of the people that are going on Robinhood, the young people that are going out there, you have to be very careful and look at it from an investment standpoint. Is this a company you want to own long term? And looking at it, there's a good chance it could be down more than 80% in the next 4 to 5 months. Take care, and we'll talk to you in a couple of weeks.